TY. All right. And then we're gonna. All right. So, hi guys. Welcome to this week's episode. My name is Pat, your mentor at Deriv Trading Academy, and today we are here to analyze Deriv synthetic indices market with you guys. So I'm gonna be analyzing only the calls that is on our focus list, and then that will be it. If ever you have any question or you want me to analyze anything for you, you can just hit me up, and then we're gonna see what to do. And if ever there is anyone with a question, you can stop me, ask whatever that you want to ask. Feel free to ask me anything. Okay. All right. So first of all, I would like to apologize to all of you guys, the one who's attending, those who are attending right now, and to anyone who will be watching this, wherever you'll be watching this, that I'm sorry for my strategy for being too slowly. With my strategy, the signals are really coming very slowly, and as of now, I'm trying to find something else, to find a new strategy that I'll be using so that you can at least get a signal maybe 5 times a week or something like that, because it seems like my signals are very slowly because of my strategy, So sorry about that. And then what I will do is that I'm gonna be analyzing. Okay, let us start. On my watch list, I have jump 10, jump 100. Here's our jump 100. On our jump 100, what are we expecting? We're expecting a buying opportunity. I'm expecting a buy opportunity there. So why am I expecting a buy opportunity? Why am I saying that we should expect a buy on this one? Because by the look of things, I don't know if you can see on your screen there very well. But then looking at this candlestick here, let me just zoom in so that everyone can see. Looking at this candlestick here, this is our weekly candlestick, because we are viewing it on our weekly time frame. This is our weekly candlestick, this one. This is the previous weekly candlestick. This candlestick closed today at 2 a.m. So we always analyze in according to the previous time frame or in according to previous candlestick, because that's just how trading is, because we cannot predict the future exactly, but then what we can do is we can analyze what has already happened and see and now start to predict the future, what will happen maybe next. So by the look of this candlestick here, you can see by the length of this body, see this body here. Let me just put it like this. This area here, the length, it is very long. So with that being said, it means that the buyers will be most likely to be in control even this week, or the week that is currently running. Okay, which is why we are expecting a buy on this one. But then, even though it is like that, we cannot enter, or you cannot enter a trade using a weekly time frame only. You need to go down to the smaller time frames for you to decide whether to enter now or later. So what we normally do with this one is jump 100. We're going to go down to daily candlestick, which is right below weekly time frame. We're going to go to daily candlestick or daily time frame. on our daily time frame, what are we looking for? The very same thing that we've been looking for from our weekly time frame. On our weekly time frame, we saw that the buyers were in control because the buying pressure there was high. How do we know that? How do we know that the buying pressure was high? By the look of the length of the body, this area here, between the opening and the closing, it is called a body, or a real body. So if the body is quite long, it means that the buying pressure is high. If it was maybe, for example, like this one, it would have been the selling pressure was too high. Okay, so in this case, the buying pressure is too high. So we are expecting the very same on our previous daily candlestick. We're expecting the same. But then by the look of this candlestick here, you can see, just like I said, that the length of the body must be long enough for us to consider a buying on that day. So looking at this previous daily candlestick or yesterday's candlestick, you can see that here was our opening. This one was our opening price, and this was our closing price. And again, let me just say, and again, by the look of this length, the length of this real body here, you can see that it is quite short. So it means that we cannot consider buying this one today. The reason I said yesterday we must expect a buy from this jump 100, it was because I thought it was gonna go up, but then only to wake up at around 2 a.m. and then check, and then I saw that this was the candlestick, the H4 candlestick that was there. Let me check. Yeah, this was the candlestick that was. Let me just confirm it. Yeah, this was the candlestick that was there at around 2 a.m. Okay, so this candlestick here, it showed no confidence. So it indicated to us that it is not a good time to buy. Okay, and even by the look of, okay, yeah, okay, so the length is not long, like it is the real body's length is very short, so it means we cannot consider buying because there was a lot of things that was happening there. It was more like there was a war, and on that war, nobody was really confirmed to be a winner on that day, which is yesterday. So we cannot consider buying today. So we're going to wait up until we see on our daily candlestick a strong buying pressure, and then we're going to consider again, we're going to go down again to H4 and do the same, and then H1, then M15, then we enter using M15 time frame. Okay, so this is how we do it. But then again, I'm going to repeat it to you that this strategy might take you a long time before you can enter. But then one thing for sure that I know is that it is best to wait for the right time to enter than to randomly enter on things that you do not understand and end up losing your money. Currently, last week, this past week, I gave the signal and then I gave you also the TP, and the TP was hit, even though like it was very close, but then the TP was hit, and then the rest or the instruments that we were focusing on did not give us a chance to buy or to sell, which is why we ended up waiting for the whole week and not getting anything, because we were waiting for that opportunity. Whenever there is a chance or there is an opportunity, I will always make sure that I share it with you. Okay. All right. So currently, as we speak, nobody lost his or her money because we are waiting. It is best to have your money on your side than to want signal like every day and then end up losing every day We don't want that. Okay, so it is best if you treat trading much more as investing, the very same way you do when you're investing in maybe stocks or whatever that you'll be investing in. It takes time. So with this one, you can apply the very same thing. Okay, getting 20% of your capital or 50% of your capital is much more better than trying to get 1000% and then end up losing everything. Okay, all right. So we're not gonna go down to H4 or H1 or maybe M15 because already our daily candlestick here is not allowing us to do so. Our daily candlestick here says we must stop for a day. Okay, because going down to H4 and H1 or maybe M15 is likely to convince us to enter, whereby the opportunity is not really good. So we're gonna just wait there, and then let us go to step index. Step index, where is it? Here you are. This is our step index, guys. Okay. This is actually our step index. All right. By the look of things again there, if I zoom out. Okay. Okay. If I zoom out, let me just zoom in. Okay, so if we zoom out, you can see all in all what is happening. You can see that the step index is actually selling. But then that does not matter because we need to consider in more recently events. So this is what happened. Let me just draw this one. I don't know if you can see it. If you cannot, let me just enlarge it so that everyone can see. Okay. All right. Let me just put it like this. Yeah, so that everyone can see right there. Okay. So with this one, this red line here, it acts as a resistance level. So normally what happens with the resistance, it is an area where the market normally return or make a turn when it reaches that point. As you can see there, it reached there, and then it went down, and then it came back again, retest, then it came back inside, and then this one as well. It was attempting to break it, but then it failed. And by the look of things from this week, from this candlestick here, let me just zoom in. This candlestick here, if you can see on your side, I hope you can see. By the look of this candlestick here, you can see the length of the body that I spoke about. It represents the pressure of the buyers or the sellers if the sellers are in control. So in this case, it was the length, the buying pressure. So you can see that the buying pressure there was now starting to be smaller. Why am I saying it was starting to be smaller? Because the distance from here, the closing price, and the opening price is not that far from each other. So by the look of things, if you were in, you could have seen that, you know what, now it is no longer a good time to buy because it is now playing at the resistance level. And another thing, you must always know that you do not want to buy at the resistance level. You need to buy at the support level. At the resistance level, the only thing that you need to do is to sell. You need to consider selling at the resistance level, and you need to consider buying at the support level. You do not need to consider selling at the support level unless it is confirmed a breakthrough. Okay, All right. So as you can see there, the length was now starting to be small, showing that the sellers are becoming stronger. Even on the following week, you can see that still the sellers are trying to be in control. And then this past week, as you can see there, you can see that the sellers are now in control, like in total control. Now, what is left there, it is for us to get that perfect spot for us to enter. How do we find that perfect spot? You already know. We go down on our time frame, go down to our daily time frame. Looking at this candlestick here for yesterday, you can see that again, the strength or the selling pressure was low. Why am I saying that? It's because the body from the opening price and the closing price, the distance from the opening price and the closing price, it was too close to each other, meaning the body is short, very short or very small. That means there is a wall there. So it might happen that it might go up and then maybe retest this level here. Let me just show you. Yeah, this level here, it might go up and then touch this and then maybe go down again. So we're going to wait for that opportunity or for that particular opportunity for us to enter. So as for today, we cannot enter. Why? Because looking at this candlestick here for yesterday, it shows that it is not a good time to enter for a sell. So going down to H4, doing the same thing, H1 doing the same thing, and M15 doing the same thing. We're no longer going to go down there because already our daily time frame is not allowing us to do so. Okay, so we're going to have to give it another weight, of which I know most people do not like. You know, when I don't give the signal because there's no opportunity or there's no anything that I see according to the strategy, yeah, people think otherwise, you know. But then I know that you're gonna understand as well as time goes on, or maybe you have another strategy that you might be using. There are more than a million strategies that you can use to trade successfully. All you need to do is to find that strategy and then focus on it and then work on it until it works. That's how it goes. So okay, so that's it for the step index. Now let us go to the last one, which is crash 1000. No, I mean crash 500. Oh, again, don't forget that on step index we are expecting a selling opportunity, which is what we have been doing here. Now let us go to crash 500. This is our crash 500, and I know that you have already noticed that what is this? That I normally don't start at our monthly time frame. I normally don't do that, but then you can do that. But then I think according to the strategy that I'm using, it does our monthly time frame does not make that much of a difference. But then you need to consider it. Then even though like it does not have that much impact, because we only hold for a week, and most of the time we don't even hold for that week because maybe 2 days, 3 days, and then our TP will be hit or we'll end up closing because we've seen a reversal candlestick there, and then we take our profit. Because the aim is to make money. We do not want to risk more than we can afford to risk. Okay, so here's our crash 500, which is the last one. As you can see again there, this one is actually at the middle, because as you can see, this is where it turned. Then this week, and then this week. Okay, because this one is actually we are actually on our weekly time frame. So what is happening there, as you can see, let me zoom in. This is our previous candlestick. Even though, okay. All right. Let me just put it. Let me just put it like that. As you can see, the length there, the length of the body, as you can see, okay, it is not that long or that small, you know, it is it is fine, like it is medium, I think I can say. It is not that long. So with that, that means we expecting a sell. Yeah, expecting a sell. I don't think there might be something wrong if we enter there, but then I just put it there, even though the selling pressure is not that high. It is high, like, yeah, it is high, not high. I hope you get me. And then with that being said, that means we're gonna go down with our time frame, going down to our weekly. Okay, let me just say this on this weekly time frame. All right, it's fine. Okay, let us go down with our time frame. This is our daily candlestick. Looking at this, okay, looking at this candlestick here. This one is the candlestick that closed yesterday, or it closed today at around 2 a.m. if you are from South Africa. Okay, I don't know about your time zone wherever you are, but then if you're using the time zone from South Africa, you can see that it closed today at around 2 o'clock a.m. Okay, so when it closed, it showed that the sellers were not in control, but the buyers was in control. Okay, while at the very same time we are expecting a sell. So if the buyers are in control, we don't want to follow it. Why we do not want to follow it? Because our weekly, we need to follow the bigger time frame. What is our bigger time frame in this case? Is our weekly time frame. What is our weekly time frame says? It says that the sellers are in control. They are going down. Okay. So if it is going down, we need to make sure that everything from daily candlestick, 4-hourly time frame, H1 and M15 also follows through. This is very simple strategy, guys. Very, very, very simple. Okay, it's not that difficult. The only thing that is maybe difficult here is the fact that you need to wait. Like you need to wait for a better entrance point, because I don't think there is a such thing as a perfect entrance point. For a better entrance point, then you're going to enter them. Okay, so currently our daily candlestick is not allowing us to sell. So if our daily candlestick is not allowing us to sell, that means for today we do not consider selling up until our daily candlestick follows through or gives us that go ahead to sell, and then we're going to consider selling on that day. But then again, we won't sell like effective immediately after, when you see that we're going to also need to consider H4, H1, and then M15. I always keep that M30 and M5 and M1 on purpose. I normally don't use that. I use M15 for entrance. Okay. So yeah, guys, that's it for this week. And again, if ever you'd like to join us on our community, like on our Telegram channel, you can check on the description if you're watching this. I know that most of you will be watching this from YouTube, which is why I'm saying this. If you're watching this and you would like to join us for you to get free signals or maybe get a mentorship program, check on the description. Everything's there. You can just click, then that's it. Thank you guys for this week, and it seems like no one is having a question, so that is fine. Okay, let me just pause for questions if there is anyone with questions. Okay, your mic is on. Everyone's mic is on. If you have a question, feel free to ask. Don't even hesitate. Okay.
Sorry.
Okay.
Yeah, I was just likely to ask for. We normally wait for 2 a.m. I think my time zone is the same like with you. So if we find the candlestick is closing at 2 a.m., do we really normally enter for that, or we shall wait for another day for maybe a selling candlestick to form?
Okay. If I heard your question correctly, what I can say is that if, let's say, we are waiting for a daily candlestick to confirm, and then at 2 a.m. it closes, and then you see that, okay, your daily candlestick allows you to sell or to buy. Again, remember that at 2 a.m., that's where our daily candlestick closes. That is where our H4 or 4 hourly time frame closes. And then again, that is where H1 closes, M15 closes. So if ever your daily candlestick closes and then it allows you to sell or to buy, then you need to check your H4 immediately. And then if it also allows you to do so, then you go straight to H1, and then if it does allow you to do so, and then you go to M15. And if M15 confirms it, and then you're gonna enter right there. And don't forget to consider the strength or the pressure of the buying or the selling. Okay, you need to consider that because that one is very, very important.
Okay, thank you for that. So let's say this candlestick close with the upper wicks, the long upper wicks, and then we found that there is maybe the for our candlestick allow us to sell. Should we just enter for that? Maybe after checking that we are having like a 4 hour allowing us and 1 hour, but this one closing with this bullish candle and then with maybe upper wicks.
Or the upper wicks maybe is long, you're saying. Okay. Okay. I don't know if I'm getting your question, but then let's say, for example, let me just zoom out and see if we can find. Okay. Let's take this one, for example. I don't know if you can see there on your side. Let's say for example this one, you can see that the upper wick is too long, right? I don't think it is wise for us to, because when I talk about the strength or the buying pressure or selling pressure, I normally consider the body, this body, the body of this body here. So if this body is small, I don't need to consider buying, even though the upper wick is that long, because it simply shows that a rejection. It simply shows a rejection. Okay. Yeah, I think I've answered you.
Yeah.
Okay. Are you satisfied?
Yeah, sure.
Okay. If ever you have any question, like, you feel free. You have my WhatsApp number and so on. You can just hit me up. Don't even hesitate to ask me whatever that you want to ask. I might maybe take some time to answer, but by then I'll always answer. All right. That's it for today, guys. Thank you very much for attending. Thank you. Have a great week ahead.
Thank you too.